Yo, what is going on, my money-making friends? It's your boy Jdun, Trades with Team Bull Trading, and I hope you're all having an amazing day. Welcome back to the Team Bull Podcast, where we bring on the best traders, the best entrepreneurs, and the best and most valuable people to help you learn, help you make money, and help you level up your life. I have been very excited for today's episode for a long time now. It's a good friend of mine, known each other about 2 years at this point, through the internet, met once in person. He is a data-driven trader. He knows a thing or two about AI. I know a lot of you guys are curious about that. He's a Team Bull trader and overall a very good friend of mine. This dude is a brainiac, a self-identified nerd. His words, not mine. And there's so much to learn and so much you're going to learn in this next hour or so. So without further ado, thank you so much for coming to the show. Welcome in, Max.
Thank you so much for having me, Jdun. Awesome to be here.
Dude, this has been a long time coming, man.
Yeah, man. We've been talking about it. Excited to make it happen.
Hey, you've been in Team Bull what now? 2 years?
Yeah, approaching it a little bit less, but yeah, getting close.
That's
awesome.
Crazy.
Awesome.
From internet Discord trading room to in the same podcast room. It's awesome.
That's what it's about, man. That's the magic of the team.
And I think that we first met. It was at Kona Grill. What was that like?
Yeah, we're getting some pizza or something, some ahi poke or something.
Oh, the best
poke nachos. So good.
And that was like what? Like was that like a year ago?
Yeah, around that.
Okay.
Last fall.
Yeah, so we met in person a year ago. Obviously, it's the second I talked to you, I was like, damn, this dude is smart. Like this dude has a bright future in trading. You kind of, after doing it for 6 going on 7 years, you kind of get, like an athlete that sees, the rookie come in, they can be like, okay, this kid's going to be a star, or this kid's going to be, isn't going to make it. The second we started talking, I was like, damn, like, this guy likes to learn.
Yeah.
That's the biggest trait I noticed about you is that you like to learn.
That's the number one thing. You got to be a student of the game every day. Wake up. I'm no pro, no expert, never going to claim to be, but every day you just got to try to get closer.
And you guys listening here, listen up. He'll say he's not an expert, but if you go into our Team Bull Discord and look at what this man types, I call him Paragraph Max. That's what a lot of us call him because he types paragraphs of just straight fire, just so much intellectual stuff, so much smart stuff. We're going to go over all of that today. And again, just so excited to have you here.
Thank you so much. I really appreciate the kind words, brother.
So diving straight in, tell us about Max. Tell us about, your story. How did you get into trading? How did you get into investing? And how did you go from, obviously everyone starts somewhere, from knowing nothing about trading and stocks to all these different smart money concepts you use now, all these different, things with options you use. And I guess, how do you get your trading style and how do you get to where you are now?
So I've been investing for a few years now. My pops is involved with investing, and he was always encouraging the importance of being a participant in markets and just trying to show the benefits that being a market participant can have over time. And you put money in, you save, you invest, hold for a long time, and you have investments that you can make use of. But the world of trading is something that really is only something that I got into in the last few years since COVID.
Sorry to interrupt you. It's a whole different world.
Completely different
night and day.
Yeah.
So you'd been what you were saying was you'd been learning about investing since I think you said 14 years old.
Yeah.
When your dad first introduced you.
Yeah, a little kid. And his whole thing was always emphasizing the importance of hey, find companies that you believe in, invest in them, hold them for a long time, and you can make money because companies do well, and over the long run, you can make returns. But obviously, especially relevant recently, we see that markets don't always go up, and you have to be willing to play both sides. And I got involved in investing seriously in Tesla back when I was in high school. And so 2015 to 2021 were good years, but 2021 to 2023 has not been. So you have to be willing to play both sides and see what way the market wants to take you, and playing upside, downside, all sides.
And so getting into your past a little bit, you said you got introduced to investing through Tesla. And I think that was through actually you learned about options through Tesla options, through what's called a leap.
That was actually my first exposure to options and what drove me to search out trading, because I started seeing people, instead of buying shares in Tesla, I was I believe in this company, so I'm going to buy a few shares here and there. And gradually saw that people were instead using what I saw being referred to as calls. And I was like, huh, what is this game? Like this whole world I just was not familiar with, but was intrigued. And like, as you emphasized, like I always digging out new knowledge. And so I was like, you know what? I need to understand what's going on here. And that's what really started getting me into the world of options trading. What brought me to Team Bull.
So you found out what an option was.
Yeah.
Clearly you'd been, somewhat invested in the stock market before. You knew about it.
Yeah.
And also, I think a key part to your story that we need to talk about before we go forward is that you have a past in coding.
Yeah.
In computers. Like
huge nerd.
Huge nerd.
Huge
Your
nerd.
words, not mine.
Yes.
You are a self-identified nerd, which is a great thing.
I love it.
Nerds make a lot of money, right? Smart people who want to learn make a lot of money.
Exactly.
They go hand in hand. So you've always had a past in coding.
Yeah.
And learning and things with, computers, and obviously you got into stocks. How would you say, and we're going to go deep into this later, but, just as a very intro to you, how is your past, having that past with coding and, just loving learning and loving to learn, semi-difficult things, like how has that played into, your path into learning how to trade?
So coding is really one of the things that will challenge you to learn things independently. It really forces that skill of like, I want to build something, and then you just have to go figure out how to do it. Like, and then that leads to just digging online, becoming really good at researching, just finding topics that you're like, I want to learn how to code in Python. So months just reading about that and just building that drive to learn and that like ability to absorb information and process it into new skills was really just something that has served me really well when it comes to trading and being like adaptable and flexible in markets.
And what you just said kind of reminds me of trading, right? You have to keep digging for new information. You have to try new things. Obviously, you put a piece of code in. I don't know anything about coding. I'm not going to sit here and act like I'm a Python expert because I'm not.
No.
But you're putting together code.
Yeah.
You're going to put in maybe some keys or whatever that don't work, and you're going to have to make changes.
All the time.
Yeah?
Perpetually, forever.
So
always making mistakes.
So that's the same thing with trading.
Yeah.
You're going to be trying to put pieces into your system. Sometimes it's not going to work. And your job is not to completely crash and delete your code versus your job is also not to completely crash and wipe out your trading account.
Exactly. Just staying composed, addressing adversity, having bugs come up that make things seem insurmountable. It definitely pushes you to really like think about what you're up against and address like where is it internally that things may be falling apart, because just like with trading, and I now recognize the similarities, like you were saying, the headspace is everything. You really have to be in your mental, like really dialed in to be able to trust yourself and trust your system. And when you take losses, whether it be that your code breaks and you make mistakes or that your trade fails and you blow this one out the water, just realizing like what went wrong and then critically assessing it rather than getting like all in your head, like, oh, I made a mistake, I messed up, I'm a failure. You can't do that. You gotta just stay level and what do I have to do now? Like what is the next step?
And really like looking at the overall situation, like you said, critically assessing. I like that. And I never till this very moment, put two and two together that there was so much similar between trading and coding. That's crazy.
Yeah, it's so interesting. It's just at the end of the day, logic. We're as market participants in here trying to understand this vast sea of information and data and execute our trades within that to the best of our ability. And it's just like with building things, like you have all these different things going on and you need to just put the pieces together to get your output that you're looking for. We want winning trades. Find the system that gets you them. That's all it comes down to.
And part of what you just said, being a winning market participant, that's a topic I want to discuss with you later. We talked about that at lunch today, and you had a very interesting and awesome take on that. So middle towards the end, we're going to go over that. Make sure you guys stick around for that.
Absolutely.
And in the meantime, I want to get back on this trading track because we have a whole, we're like an Amtrak train leaving California. By the time of this, we're being in New York, and you're going to be like, what the fuck? I just learned a ton. So let's get back on this trading track, all right?
Yes.
So you got introduced to options, Tesla Leaps, as we talked about.
Yeah.
Knew about Tesla stock. Started trading, really like getting into the world of trading back around like 2020-ish. Fair to say?
Yeah. That was when I got more active with my trading. Yeah.
So at that point, you really didn't know much, I assume. I don't want to speak for you, but you realize there's this whole new world. There's a lot of money to be made.
Yeah.
And I want to be part of that money.
Completely.
Very fair. So can you tell us about when you first started trading, maybe if you got lucky, if you didn't get lucky, and a little bit of, your experience with that?
So where it really starts is that while I was investing in Tesla, I started noticing the impact of these options. And it started to pique my interest because seeing how people would buy calls in this stock and then somehow it was also being bought up separate from the calls, it was making me think about what the connection was here. And that was where I started really getting interested in the whole flow nature of markets, seeing how people were buying Tesla calls and that was driving underlying market mechanisms that were pushing the stock higher. And seeing how those dynamics played out in Tesla and how it ultimately, in my opinion, is what led to that blow off top with all retail buying just Tesla calls, Tesla to the moon, Tesla, all the memes, all the gifts.
You mean back when Tesla used to go up 10% a day for months straight?
Some of the best mornings and some of the worst mornings trading Tesla.
Gosh.
But yeah, and seeing that was just like, how is this possible? Like, this isn't what I understand investing to be, because I've been raised on the idea of like, oh, you 8% a year.
You got to look at the PE ratio.
Yeah,
and make sure that all that crazy stuff.
14-year-old Max is a wannabe value investor trying to be like Pops and understand this stuff, and then realize that the game has changed. Like, this isn't we're in a different world now. Like, that was where I really started to see the difference between like investing and trading.
So seeing how these options, had a significance in how the underlying stock moved, kind of like sat in your brain. You're like, like, I wonder if there's more I can learn about this. I assume, correct?
Yeah. So I guess to be clear, at the time, I saw these two as separate data points, I suppose. That's a way to put it, is that I saw all of these options being bought, but I also saw the stock going up. And at the time, I didn't understand the connection between the two. And it wasn't actually until I joined Team Bull and had the opportunity of learning from people like Savage, like Wall Street Savage was one of the first people who really introduced the idea of options hedging and what the options flow can do to an underlying stock. And that was where the pieces started clicking for me. So I was like, I recognize this. This is what's going on here. And that was really what started that journey into digging into options, is realizing like this thing that I had been observing for some amount of time, like probably over a year, where it was just pumping on options. There was like, this is how this works. This is why this is happening. And that was empowering and really fun to have that knowledge.
And so you get introduced to this idea that, hey, like, every new trader is like, oh, I can buy calls, stock goes up, I make money.
Yeah.
I can buy puts, oh, stock goes down, I make money. Like these very simple concepts, right?
Exactly.
But you get introduced to this idea inside Team Bull that like, hey, maybe there's more going on behind the scenes that I can learn and give myself an edge in the market.
Exactly. Which,
a little bit about your past. We're not here to talk about Team Bull. Obviously, we have an amazing family.
Yeah, I love it. It's an amazing place, but yeah.
He's been apart for 2 years.
Yeah.
We've been going on strong for 3+ and made some awesome friends, connections, people in there.
Yeah, absolutely.
So obviously we want to point that out, but we're not here to just talk about Team Bull. I think it's helped Max a lot. I think it's helped a lot of people a lot.
I'm just enthusiastic about the knowledge that I've gotten through having the ability to interact with all the different brilliant traders. It's just a really fun time to have the ability to ask questions to people with more experience than you and just kind of like leap some of that learning time.
And also like you said, you learned something from one of our traders inside there that sparked your interest and opened you up to a whole new world
completely
of trading in what is now Paragraph Max.
Yes, that is the birth of Paragraph Max.
So you start learning that there might be more to just options than just calls and puts. Now I want to put the brakes on this. I want us, whether you're a beginner trader, intermediate, or advanced, I want you guys to be able to get value from this. At this point, you probably should have a notebook out, or at least put your brain notebook on, because you're going to learn a ton in the next while here. So make sure you guys stick to the end. It's going to be a banger. So you get introduced to this whole new world, and you start learning about options, Greeks and stuff. Just to start, can you give us a breakdown on what the different option Greeks are, the basics ones you use? Obviously, there's there's secondary ones and all that, but the basic ones you use and what our listeners need to know when it comes to the different option Greeks, like you'll see in the option chain right here.
Great. So when we're trading options, the primary Greeks that we're going to be worrying about are delta, vega, and theta. And those are, delta is the amount that your options contract is going to change per dollar move on the underlying. So if you have SPY contracts, $1 move on SPY will give you that amount in delta.
So basically, if you have a delta of 30 cents,
yes,
and SPY is at 400, if SPY goes up to 401, your premium on your contract is going to move 30 cents.
30 cents.
Okay.
Yes, exactly. And so that insight gives us the start of this awesome puzzle that unfolds before us with this game.
And that we're gonna complete before the end of this video.
Absolutely. We'll make sure to get there. And so with delta, I think another important thing to know when we're approaching it is that delta is also an approximation of an option's probability of expiring in the money. So not only is it just the amount that your premium will move per dollar in the underlying, but it's also the likelihood that the contract that you're trading is going to expire worth something. So if you have that 30 delta contract, that currently has about a 30% probability of being in the money at expiry. And so that's just a small detail, but will be important down the line. And then from there, we go from delta to vega. And vega is similar, but this is the amount that our contract premium is going to move per percent in implied volatility. And so when our IV changes, that's also going to impact the pricing of our option. And so when implied volatility rises, just like how that delta value is added onto your premium, the vega value is added onto your premium as well.
And so for anyone here that's ever traded options before,
yeah,
when, let's say, for example, Netflix has earnings tomorrow, hypothetically speaking, their vega, their implied volatility, going to be way higher.
Yeah.
When they release those earnings and it opens the next day, that's going to drop. Therefore, if you don't get the implied move, if you don't get a big enough move in layman's terms, that vega is going to drop and it's going to crush your contracts.
Exactly. And that vega is where it really gets you. And
you can get crushed.
You
can get crushed if you don't know what you're doing.
And that's the thing with Greeks is that you may be sitting here, we've all done it. You take a NVIDIA earnings lotto and you think the stock goes down $6, you're like, oh my God, I have puts. We're printing. This is great. And you wake up the next morning, you're like, I can't believe it. Like, we had the move right and everything, and I got smoked. And it's just, that's where the Greeks come into play with our options.
Bro, and not to get off track, but I literally, whenever new traders come into Team Bull, they're like, Jdun, I want to try this earnings lotto. And I'll be like, hey, just so you know, it's super risky. Like, your implied volatility is high. You have to, even if it goes down $1 or $2 or $3, like you just said, you might not make money. And they're like, okay. And they're like, I understand. And then that happens. And they're like, Jdun, I just lost $1,000. Like, what's happening? I'm like, bro, I told you.
Yeah. It's overwhelming because there's a definite tendency of new traders to join and be like, do I really need to learn this stuff? Like, and do you need to? Yes. Unfortunately, I hate to tell you, yes. If you're going to trade options, you need to understand the Greeks and understand what you're playing with, because it's not just pure price action. It's not just pure delta. Like, we do have that implied volatility to worry about. We do have that theta to worry about, which is our next one. But yeah, and it's a game that we're playing against all these different participants looking to both buy and sell options to take as much of our money as they can.
And our job in Team Bull is to keep it with the people.
Exactly.
Hoorah, baby.
This is the way.
So the next one, theta. Can you touch on that for us?
Yeah. So theta, this is the one that everyone as day traders, especially my 0DTE friends, will detest most. The theta is the amount that your contract per day decreases. So if you have a contract that's 250, 2.5, and it expires today, your theta is probably about negative 2.5, saying that by the end of today, your option's likely to expire worthless, if it's out of the money for that example. But yeah, so from that, we have to consider how over the course of us holding an option from the time we buy it to the time we sell it, how much we're ending up paying for that opportunity. And so between delta, vega, and theta, you're paying for how much price action up and down are you going to be rewarded by? How much volatility increase are you going to be rewarded? And then how much are you expected to pay for that opportunity?
And so you know all these Greeks now, right?
Yeah.
You have your basic Greeks. What I think is super cool about what you do is you obviously trade price action, supply and demand. You use both those things.
Yeah.
But you look deeper. You look into how the market makers. So whenever you buy an option contract, right, people think that you just come in, especially new traders, they come in and you're like, okay, I'm just going to buy a call and it's just going to, come from, the option fairy, the tooth fairy.
Exactly.
Right. But in reality, there's someone selling you that contract. If you're buying a contract, there is someone selling it to you, and that person selling it to you likely has a big bankroll, because the ones who sell contracts are trading with margin, and they're likely, big players in the game, institutions, market makers, or what you refer to them as dealers. So you came in and you're like, okay, I know all these Greeks. I know how to analyze them. Can you tell us a little intro into, what you look for in terms of spotting what big money wants to do, how they might be trying to screw us over as retail, and just like, I guess, a little insight into your strategy before we branch off into the different sectors?
Yeah. And so I think that this is something super interesting, because people think of Greeks as just like, just hedging flows. But like, what does hedging flows mean? Like you're getting at, when we're trading supply and demand, in supply, people are selling. In demand, people are buying. But what are they buying? In supply, for example, when we're looking to see price go up further, as retail, we may be looking for trend. We may be thinking like price is going up, we're going to keep going up, but we're in the supply zone. There may be dealers there who are thinking like, you know what? I don't think that price is going to keep going up. And they take that opportunity to sell, at that point, expensive options.
Expensive calls, probably.
In supply, expensive calls for sure.
Yes.
And that's where these smart money participants, like you were calling them, have this edge, because they have all the fancy models and all the advanced math saying what the probability we end up here versus here is. And they can take those opportunities to sell contracts for more than they think they're worth. So if you're an options dealer and you say that you think that price is going to go down, for us, we may say, all right, we have to buy puts because we think price is going to go down. But there's another side to it. We can instead, if you're a dealer, we're going to sell calls because we don't think it's going to go up anymore, and we think these calls are worthless. So we're willing to get rid of those because we sell those now. You pay us. We, as a dealer, you make the money from selling the option, and then your profit is as the option goes down, because you sell the contract, and then let's say you sell the contract at $10. If the contract goes to $11, you've lost $100. But if it goes to $5, you've now made $500. And that is the other side of the game. So if a dealer thinks that price is going to go down, instead of buying puts, perhaps they sell calls. Both of those are equivalent.
And with, obviously, if you've been trading a while, or other traders, you know that many beginner traders fail because they don't realize all these things. They don't realize if you're going to make money trading options, you got to be on your game.
Yeah.
And the people you're competing against, these dealers that you're talking about that are saying, we think price is going to go down. We're going to sell calls here with inflated price because these are going to be worthless. Well, these dealers you're talking about also have the ability to artificially inflate or deflate price with all their volume.
Yeah.
So that's something that I want to talk on with you too, and something that we discussed earlier in preparation for this.
Yeah.
Was that these dealers have a lot of game for volume. They have tools that we just don't have as retail. And so can you explain to us, let's give a situation. A lot of traders, whether it be buying expensive puts, like let's say you see the price falling into a big support zone, or you see the price rising into a big supply zone. Let's use support zone as our example. So price is going down, down, down. You have expensive puts down here. What can market makers do or dealers do, tomato, to screw us over and to make their pockets fatter?
So,
or what happens? Like, if you have that time where you buy that contract, immediately it spikes up and you're like, I just lost 50%, especially the 0 DTE just lost 80%.
So this is a brutal feeling for any trader, but is one that's familiar for all of us. And it really does come down to this same mechanism of selling options, because in the case that you mentioned here, where we're dropping down into a support, for example, you may have just the market buying into this contract. So there's more demand for the contract. So you have this demand on the individual contract pushing the price up. But at a certain point, that demand reaches a point where the price has gotten to a high enough level that there's now an interest for a dealer, for example, to say, you know what, I'm going to sell this contract. There's all these participants who are looking to buy it. Then they flood that supply of that contract, and that crushes your implied volatility, because now all of a sudden that there was all these people trying to buy your option, and now you have someone coming in and just dumping it. Like, that's going to push the price down. It's just a basic supply and demand problem. Just if the price is going up in your favor, it has the market pushing it, and then at a certain point there will be dealers looking to short that contract. And that's where in our support zone we'll see participants looking to go and sell that contract in bulk. And largely what happens is there'll be contracts that are like in the money. So those like 60 delta, 50, 60 deltas that start getting sold, or it's sold or monetized, or depending on if it's a dealer selling the option or if it's that there was someone who bought the contract earlier who then is selling it at that point. But the point being is that at that instant, you create this supply and demand imbalance that shifts.
And that's one thing you got to remember too, is like these dealers, these, funds, the smart money doesn't have retail's best interest at heart. So they're seeing when retail, dumb money, that's what I call retail, is piling in to these contracts, that they can see two things, and correct me if you have more or if I'm wrong. They can see, for one, when retail's piling in, when all this money's piling into a contract that, the move might not be actually supported, and that they could inflate the price to, have that spike back up. They can flood the market, whatever it is, which will, for one, just crush your contracts immediately. Or for two, push, how do I put this? Push a contract to a certain price, push the price down. When it gets to that, when there's enough, people to screw over, I guess, send that stock on back up and crush premiums.
Exactly. It's just a battle for liquidity. There's just this testing that the market does is this an efficient purchase? Is this participant willing to back this order? If you have someone buying a contract that was just at $2 at $8, there may be some participants who want to see if that participant means business. Are you going to back that? Or if we start dumping this contract, are you going to keep buying it? Whoever has the bigger bankroll will probably win that encounter.
And most of the time, that's smart money.
Yeah, we got to be on their side.
So I assume many people are sitting here asking, they're like, okay, this all makes sense. I want to trade like smart money. What are some tools that you use that everyone listening could use to, identify, clues that, okay, price is getting to supply, price is getting to demand. I want to see what smart money is doing. I want to have more clues into that. What are some things that you do or you can recommend to help people do that?
Yeah. So just it doesn't have to be complicated. There's all these amazing flow tools that people will say that you should use, but you can just go to your broker, just Thinkorswim, just go to your options chain and scroll to the bottom. There's a time and sales for whatever options chain you're looking at. And I'll just pull a window of that out. You can press a little arrow, pop out your time and sales, put that next to your chart, and just watch.
You can see all the option orders coming through.
You'll just see all the options coming through. And so what I'll do is it can be a lot. So filter out for bigger orders. So you get rid of all the small single orders. We don't really care about that.
And is there a specific number, like a lot size that you filter out?
10 to 25 to 50, depending on what you how much data you're willing to look at. I like the 25 on TOS just because it seems like a pretty solid range where it refines out enough, but you still see the impactful orders.
Okay, so you basically filter out all those smaller orders, keep it so only the big ones come in, smart money, and so you don't get, I guess, confused, sidetracked. You can keep your focus on what you're watching.
Exactly, yeah. When we're doing this stuff visually, if we're using time and sales, our means of reading this data is visually watching it come through this feed. So we don't want to see thousands of orders just ripping through it open. I want to just see that, okay, there was 70 lots of these in the money calls bought. There's 60 lots of these out of the money puts sold, and seeing those kind of flows and just being able to notice the patterns. Are we in a demand zone? All right, I'm watching for both in the money, higher delta call buying, and then I'm also watching for larger in the money put selling. So on your Thinkorswim, the time and sales, the flow is red or green for bid or ask. So when we see a trade happen at the bid, we think of it as being a sale, right? Someone's selling that contract. So if you start seeing large amounts of selling volume occurring on puts when we're sitting in a demand zone, that's telling me that hey, we should be on watch because there's a chance that we're going to see this pop coming here. And that's just if you can stay one step ahead of that, so that even just in those few seconds between you see that order on the time and sales, you go 60 delta puts being sold in demand, I'm going to maybe trim this trade off a little bit. Just little things like that. And obviously nothing's 100%. We're looking at the aggregate of millions of people trading the markets. There's not going to be that one order tells you exactly what's going to happen, but using this insight gives us the chance to see what the market's doing, because we can sit in demand and be just doing nothing for hours. But when you start seeing those bigger contracts getting sold when we're in our demand zone, that's when we start usually seeing stuff happen, and having that insight can just really help you refine things a little bit.
And so when you're seeing these big orders come in, in supply and demand at these key levels, we talked about this too, you'll notice a lot of these big orders, and they have a lot of relevance, I guess, when we get to these key levels. You'll notice they kind of go hand in hand.
Yeah.
Well, so if you can watch those, and if nothing else, you can watch and see, you're in demand. You're okay, all of these in the money puts are being sold. What's going on here, right? If nothing else, it might save you from that kill candle on the way up, or vice versa. And if you're up in supply, you see the opposite being sold, it might save you from that kill candle going down that you were going to try to long.
Exactly.
Now, it can also be this. It can also be from, what you've said. You can be watching flow, whether that's your TOS time and sales. I recommend that. It's a good one. It's free. There's also different services you can use. I think you use this. So side note, you have been programming your own kind of flow service, correct?
Yeah.
You use a company called Theta Data.
Yeah. Theta Data is great.
It's just data.
Yeah.
So you use that. Do you ever use Flow Algo or Cheddar Flow or, any of those services, Unusual Whales, any of that stuff?
So I think that there's good insights come from them, and they're really useful. But I feel like a lot of people who use flow think of it as some end all be all, that like, oh, I see these calls being bought, that means we have to be following that trade. And like, there's a lot of these services have a tendency to make the conviction of the signal higher than I think it should be, if that makes sense.
Yeah.
Like the market's about probabilities, and anyone who's telling you that something is definitely going to happen, or like if you're reading something thinking like this means this has to happen, that's like a trap. Well, and with these flow tools, so long as you're mindful of like, this is an edge, this is some guidance, it's not that this is what's going to happen, it can be helpful. But I think that it's important to keep that in mind when using them.
Well, and a good example of that is like with Flow Algo. They have their things called golden sweeps, where if an order of a certain size comes in above the ask, it has a big golden banner on it. So a lot of people think they're like, oh, I can just go watch Flow, and if I see a golden sweep Tesla call, I'm just going to go right into Tesla calls and buy. And unfortunately, it's not as simple as that. If it was, we'd all be retired on the Bahama beaches, out in or the Bora Bora beaches, and we would just wait for golden sweeps and wait for seeing a big flow order, and we would buy calls or puts and get rich.
Exactly,
it's not that easy.
Would be so simple. We wouldn't be showing up every morning.
We probably wouldn't even be filming this podcast.
No,
we'd have so much money that we'd be retired and probably never trading again.
Exactly.
No, but it just goes to show there's so much more to flow than meets the eye. So what would be, as someone who uses flow as a primary part of your edge, what would be something you recommend to people to use or to watch for, to, I guess, know?
I think it's interesting because really it's not a satisfying answer, but the biggest insight that I have is to treat flow as a mentality and really understand like what the flow is telling you. Because the flow, on Thinkorswim will highlight selling orders red, meaning that they're near the bid, or buying orders as green near the ask. But a lot of times, like we were talking about earlier, if there's a dealer that's looking to sell options, you want to get as much money as you can for that option. So like, why are you going to take a lower price on that? The best thing that could happen is that you see someone interested in buying large amounts of the contract that you're looking to sell when, like, at the ask. You're getting the increased price on that option sale. And so it's important to consider things like that. Like, there's all these dynamics that we have to pay attention to when we're using flow. But I really think that just keeping it as simple as possible, with having a chart up with your supply and demand zones, and then just having your time and sales next to it, and watching when we're in supply, where you see those large in the money call selling happening, and out the money or in the money put buying, looking for those reversals, or in demand looking for large in the money put selling. Just having that headspace and being on the watch for that will, more than signing up for a $100, $200 flow service, will really get you thinking like an options market participant and looking to see like, oh, you know what? There's going to be someone who may be looking to sell puts here, so I'm going to watch out for that. And more than this chart over here is going to tell you all that you need to know, it's developing the headspace behind like puts being sold in demand or calls being sold in supply is equivalent to our side being long calls in demand or long puts in supply.
And being a winning market participant.
Exactly.
Super interesting, like a term, and I guess like thing we need to do. And also it's like a mindset, right? Like I like how you put it as a mindset. So I think too many traders think it's very basic. It's like, okay, I'm going to learn how to trade. I'm going to know when to buy calls and when. I'm going to know how to buy puts when win. But there's so much more to it. You got to think like smart money.
Yeah.
You got to think like, the multi-millionaires that are probably selling you those options. And I want, we want everyone thinking like, okay, where is my best probability? What can I look at? So when it comes to flow, exactly. I think that the best way to put, in my eyes, that is like, you're using flow at your key levels. Like if Tesla's at a big demand, we're going to use Tesla for an example again, Tesla's at a big demand, and then you start seeing all this flow come in of golden sweeps and all these, buys above the ask and all that. It's not a for sure buy, but it's something that like might be, okay, this could mean something.
Exactly.
Right?
Exactly.
Now, obviously, the technicals come into play with that. You got to, watch for your levels of support, your key levels for stop loss, all that stuff we're not getting into today. But
yeah,
I think that flow can be a nice supporting tool and also helping build that mindset.
Yeah, and exactly. Just building the mindset of being like, because it is different. Trading like stocks, trading equity is a different game than trading options because you don't have the Greeks in equity. Like you're looking, like you can look for short squeezes or something, but in options, it's like you have so many different types of hedging flows that can drive price action, and understanding how those different pieces come together in relation to our systems, whether it be that you're a supply and demand trader, you're a support and resistance trader, you trade flags even. Maybe it's that you look at the flow on a flag break. I don't know.
The bull flag flow,
the
baby.
bull flag flow breakout. That's what maybe that's your A+ setup. Like, I don't know. But if you can use as much of this market data to make the most informed decisions as possible, that's what, to me, it means being a good market participant. Like, I want to be adaptive. I want to be flexible. When I saw Tesla going to $1,100 a share, all I could think was I'm just selling these shares. Like, this is out of control. Like, this has gone to the moon. You could buy puts. I could have sold calls. Like, there's so many different ways that you can then approach the game. And it just adds this whole layer to it.
Whole layer, like a damn onion, man.
Yeah.
So speaking of unpeeling the onion, we're going to get to AI in just a second. But before we go over to AI, the big hot topic these days, is it going to take over trading? Is it going to take over the world? You'll find out in a few minutes. I want to go into something that we wanted to talk about too, and that's hedging. Yeah. What can you tell us about how dealers and market makers hedge, how they put themselves in a better position to win, and what it means for us as traders?
Yeah, so this understanding is really kind of like what ties it all together, in my opinion. But understanding how, like, when you buy, there's someone who's selling us that contract. But what that means is when someone sells us that contract, we establish this relationship with them. Like, when we buy a call, we're making money. There's someone who's losing that amount of money as well. So what that means is that we can now use the balancing act of this relationship between the option buyer and the seller to inform what we should expect from the market. If we see large amounts of calls being bought, it's important to note that one of the primary dealer, we talk about hedging, like it's hedging, it's not all directional. The big thing is that when dealers are selling options, they want to be more balanced. So you buy calls, the market participant, us traders, we buy calls from this dealer. The dealer now is losing money to us when we're making money on that move up. But what they can do to counter that is hedge that by being what's called delta neutral. So they'll go and make sure that when they are losing money on the sale to us that's going in our favor, they're making money somewhere else. So this is specifically the topic that really brought trading together for me, was understanding the dynamic between when someone buys a call and what the dealer does when they sell that call. It's fascinating because that delta is what tells you just how strong the buying is going to be. And so we can, using these math equations, figure out how the market's likely to respond. So dealer sells us that call, they buy so that they make the same amount on that move up that they're losing to us on our call. So it's complicated, but if we slow down for a second and
so basically, if they hedge themselves and if they're losing money to us on calls, they're still going to make some money, on that underlying move up.
Yes.
But if the market shifts it down, that premium they sold us is going to print for them, and they'll lose a little money on their hedge, but they'll make money on their initial.
Exactly. And it's just a constant balancing act of dealers managing those hedging flows. And this is a science that they're participants who have spent 20 years studying, and it's changing every day. We're recording this on a Friday before a new VIX index comes out. We have VIX 1 day coming out on Monday, which is going to show us all of the implied volatility of just the 0DTE options. So there's all these new mechanisms that are always coming on. Like 0DTE options on SPX is only like a year and a half old. Like we're at the forefront of this game. Like it's just getting started.
So it's funny you mentioned 0DTE because it's such a big topic of discussion nowadays. Yeah. How do you feel about 0DTE? What's your thoughts on traders trading it, and what are Max's thoughts on 0DTE?
So it's again a controversial one, but I love 0DTE, and I think that it's one of those tools that has to be respected because there's nothing that offers the flexibility like trading 0DTE. Like as someone coming from a world where of investing, like when you buy a stock, you can hedge. Speaking of other hedging flows, you can hedge your portfolio by buying puts. So if you hold a bunch of stock and you're worried that it's going to go down, you can hedge that by buying puts. But in the past, it may have been that you bought puts 3 months out and then you waited for that big move down to happen, and that was what paid out against your portfolio. But nowadays with 0DTE, it's like, shoot, Janet Yellen talks in 23 minutes. Like, I really got to be careful here. Like, we're going to buy these puts right here, and then I'm going to sell them in 29 minutes when I'm sure that she's not going to tank this market.
And Jerome Powell might come on and say some words he shouldn't say, and I might just, fuck around and make 200% on puts.
Exactly. Literally. And it's because there was someone else who was like, oh, just kidding. I thought Printer Powell was going to be here. I'm buying these calls. He did not show up today. I am selling all of these calls. And now that hedging flow is going to help your puts print.
It's crazy. It's
crazy.
It's such a volatile world. And I really like how one term you just used. It must be respected. It can be a great tool. If you know what you're doing and you have extremely good risk management, you could crush it on 0DTE, on 1DTE. But if you don't, if you're just a degenerate gambler, if you're just buying at will, if you're not paying attention, like all these different things, you will get bent over.
Yeah, absolutely destroyed. Like absolutely destroyed. And it's incredible the effectiveness at destroying participants who buy 0DTE options.
It's like,
but it's something. And recently it's really cool to see because I've been working at approaching the other side. Haven't been with Team Bull for a while. I've been trying to expand my horizons. I'm always trying to learn new things, but I've been approaching like the other side of the trade. For a long time, I love 0DTEs as just, I would look for like the 0.2 to 0.3 delta, and we were getting these very sharp moves that would go and run 30 points, and you would end up getting explosive moves. But we just, over the last few months, haven't been getting that sort of price action. It's just been chop, back and forth markets, just tight range.
Real slow.
And trading 0DTE in that, like, has been an eye-opener. It's a totally different game than the 2022 big sharp move down. Then all day we're going to just sell off into close, just continue going. Like, no, today it's all this rapid back and forth. And what that's shown me is how effective 0DTEs are from the other side, because we were talking about theta earlier, but that's our worst enemy as a long options trader. When we're buying options, it's just destroying us. But if you're the people selling those options, 0DTE offers unbelievable potential for returns. But this is why I think that just understanding these, like, this headspace is so important, because like that flow is ultimately what we can use to ride the wave or just battle this incessant current against. Like if the flow is going against you, there's nothing that you can do. Like you're not going to buy puts into a squeeze and have it print. Like, it just isn't going to happen. But the interesting thing seeing the option selling side of things is that with theta, the opportunities to sell these options and have them expire worthless is just immense. And so it just has me thinking about a lot of bait to get 0DTE customers buying expensive options that they know are going to expire worthless. And it's a hard game. But
so basically you're looking into, and hopefully going to be bringing value to Team Bull with, might I add, the whole side of not just, let's, buy SPX calls or buy SPX puts, which, side note, you only trade SPX.
Yeah.
Not SPY. No. Or ES, just SPX.
Yeah.
We didn't touch on that earlier. I think that's interesting.
Yeah.
But instead of just being the buyer of those, you want to be the seller a lot of the times. And if we keep going with, some days we have some nice moves up and down, whatever, but if we keep getting these slow grind days of up and down choppy action, you're going to be able to take advantage of that. You're going to be able to make money on options, but you're going to be selling them to the degenerate gamblers. You're going to be making money off all the people you see, bitching and complaining about, 0DT crushed me. Well, it didn't crush Max. It helped Max.
But the thing is it crushed me so many times. That's the only way that I gained this insight, was just being on the wrong side over and over and being like, what is going on that these one candle can absolutely ruin a trade? Like, I have a trade that's going in my favor 40%, one candle on SPX, and it takes out all of my profit, stops me at minus 30%. Like, less than a minute. I'm just like, how is this possible? Like, what is going on here? And for a lot of people, I think that's the point. When you experience that setback of being like, I'm getting destroyed and I have no idea what's happening, it's like, are you going to let that drive you to quit? Or are you going to let that motivate you to understand what you're not seeing? Because, it's all about the mindset. Like, you can sit here and go, oh, the market's rigged. It's going to beat me. There's nothing I can do. I'm just a single person. It's going to take everything. And then, you're going to lose your motivation to trade. You're going to lose your motivation to be a market participant, which perhaps is the right thing, because if you don't know what's going on in the market, you have to figure that out. But
gotta learn.
You have to be willing to adapt. But it really is just being willing to see all the different sides of it. It's like, all right, I'm on the wrong side here. Who's winning this trade, and what are they doing differently? And just game theory is one of those topics that I'm not going to go into, but I would highly encourage people to think about, because the notion of this game of the dealer and the customer, and it's you and this dealer that's battling throughout this trade that you're in, and just understanding how you're going to manage that and what tricks they're going to use against you.
And understanding it's a zero-sum game. Someone's losing money.
Exactly.
Someone's getting boned.
Yeah.
Our job is to make sure it's not us.
Exactly. And just doing all that we can to put ourselves on the defensive when needed, and go for the throat when you got the chance.
Yep. And that's where all these things different, if you find indicators as a part of your edge, fine. If price action is a part of your edge, fine. If, flow is a part of your edge, fine. But that's where all this experience comes in, and knowing when you have that edge versus your opponent versus your enemy, and really utilizing it.
Exactly.
And really, again, when you got to go for the throat in that trade, you do it. You got no one to sit back. You got no one, okay, my edge isn't here. My edge isn't present. I'm staying cash.
Yeah, that's the thing that I think really stands out to me between participants who are looking for their strategy, and then those who have their strategy. When you have your strategy, those moments where you're I can go for this here. This is my risk, and then you can jump on it. And having just whatever it is for you, like you said, support, resistance, supply and demand, chart patterns, indicators, knowing what you can do to put those pieces together so you give yourself the best shot at being the winner of that zero-sum game is just really all that matters. And we can look at it from all these angles, but it just comes down to price action at the end of the day, like you always emphasize.
So 100% agree. We're playing this zero-sum game. Let's say you're the dealer, I'm the customer, I'm the trader. Mm-hmm. Well, I got to pull up a third chair because we got another force coming into the market, and that is AI. Is this going to make a big deal in our market? Is AI going to tell us the winning stocks? Is AI going to take over the stock market? You have a lot of coding experience. You are a very avid learner. I want to hear your thoughts on AI and, if we're all doomed as traders.
Definitely not doomed as traders. I think that if anything, it's just a tool for empowerment. People who find ways to be productive with it will just be more productive. There will be people there. The notion of AI isn't new to markets. I believe you shared a video the other day talking about this is something that hedge funds and quants have been doing for some time, using natural language models to read Fed statements. This isn't a groundbreaking technology. It's just that it's so much more widely available than ever before. But really what I like to think is that this is going to be a playing field leveler. I will say I've been using GPT-4 in some of the models that I've been building recently. I've been working on algorithmic execution and building models for flow. There's times where there were complicated programming libraries that I previously couldn't use. My skill wasn't up to snuff. And GPT has helped me learn how to make use of these things in ways that's let me expand my strategy. I am now able to like we were talking about earlier, write my own flow tools so I can really dig down into the exact pieces of data that I want. That in the past, that may have been something that was reserved for hedge funds. I'm just a 26-year-old guy in my living room, writing code. This is the kind of thing that gives people, just regular people, opportunity to do all these things that they may feel are impossible, but no longer.
And here's the thing about AI is, people see it and they're like, oh my gosh, it's this genius computer system that's going to know the next big stock. When in reality, the AI, while it can do incredible things across many different industries, it can only do so much in terms of okay, it says that, Fed Chair Jerome Powell's statement is hawkish or bullish. Well, no shit, dude, I can do that. I do that live trading in Team Bull. You can do that. I could teach my 9-year-old little brother to listen to his statements and say if it's hawkish or dovish. In the end, nobody, not even a computer, knows where the market's going to go.
No.
There's hedge funds that have had these tools forever.
Yeah.
Quants that have been, making mathematical formulas to, read volume and this and that and the next forever.
Yeah.
So I think people need to cool the jets on being so scared of this and look at it as okay, even if this crazy tool comes out that can give me an edge or tell me things about volume or tell me things about price or, previous market trends, use it to your advantage.
Exactly.
Right. And if not, in the end, price action is still going to be the king of all, using all your different things, watching what price is doing, watching, your levels of supply and demand, watching, what the market is telling you and reacting. There's no way AI can tell you how the market's going to react. It just can't. And it probably never will.
No, there's just too many people with their own free will at any given time, making their own decisions that you can't predict the future. You can model it well. There will be firms that use this to do incredible things and make tons of money, but I don't think that it's the kind of thing that's going to threaten the existence of traders. But we'll see. It's cool to think about the possibilities of the technology, but I think that in terms of language models, it's not going to be the thing that ends the market. But if anything, I think 0DTE is the one that's the bigger wrench in the cog.
Yeah. What do you mean by that? Can you expand on that?
We've been seeing these mean reversions so aggressively recently.
And can you go back? What's a mean reversion?
A mean reversion.
Sorry.
Okay. No.
It's for everyone that's kind of new and wants to know what that is while they're watching.
So we have trending markets where they get really strong. We'll go in one direction really aggressively. And then a mean reversion is that retrace back towards the average of the trend, for example. But what's interesting is talking about 0DTE and flows gets us into this really interesting puzzle, because with 0DTE, the way it works is that so often it'll be that the market has participants who are buying the contracts at the open. So people buy, market opens, people buy all their calls. But when those calls are opened, the dealers now are hedging those calls. But those calls are going to expire at the end of the day. So like you want to sell those calls at some point before close, because like probably like you like money, you buy calls not because you're going to let them expire either in the money or worthless. You buy calls because you're trading them. You buy calls because you're going to buy them and then you're going to sell them. And what's interesting is that this 0DTE hedging flow results in moments where you have large participants buying one side of the trade will have a really strong move. But then as those positions get monetized or sold, it brings us right back. And so that's where we have these like really rapid, aggressive swings and then right back to flat. Like I think 3 days this week, we've had moves where we got 30 points right back to break even on the day. And it's just, that is the kind of thing where you're like, what is going on? Like, what is possibly causing this? And it's like, it's all flow, just all flow. Because people buy their calls, then they sell their calls, and then that hedging is neutralized, and we get back to where we started. You buy your puts, we go down, people start selling their puts, and it bounces us back up. And so it's just understanding that, like, you have this incentive as a whole market that when you get a move in your favor and you're long those options, like you want to sell those options, because like we know what happens when we hold 0DTE trades from open through end of day. Like
not good things usually.
Not the greatest. You know, we both look at each other and go, oh yeah, that's not the greatest time.
No.
So yeah, exactly. And that's why that leads to these kind of like weird price swings. So everyone's sitting here afraid of what AI is going to do, the price action and their ability to trade. And it's like, be much more concerned about understanding the 0DTE flow that just is like perplexing everyone. I swear, like there's so many participants, both retail and otherwise, institutional investors, everyone's confused at what's going on because this is such a new phenomena.
And it goes to show what happens in the markets isn't random. Right? It's not random. It might seem like it. There's some times where it might be irrational, but it's not random. There's always a reason behind what's happening.
Exactly.
So, understand the flow, understand what big money is doing, understand where the volume is coming from. Great tool people can use to get a bit bigger edge on making money in the market.
Exactly. Absolutely.
So I think that any tools we can use, everything we've talked about today, hell, even utilizing AI, doing all these things is imperative to if you want to make money for the next 2, 3, 4, 5 years trading.
Totally agreed.
So we're in the long game, and you got to keep learning. And that's again something I commend you so much on, is that you love learning.
Always.
That's why you're going to make it as a trader. You have to love learning. No one wants to learn. Everyone wants to come and listen. We live trade in Team Bull. We have. I don't like to call us a signal community. We're not a signal community. We're an education community. We have people come in and they're like, Jdun, where's the signal? I want signal calls or puts, and it's like, bro, like. I have not to this day met one trader who's ever just taken signals for 2 years straight and made money. And impossible.
If you're one of those people who ask this and I flame you in chat, like I apologize. Like I only do it because I love you. Like I just want to
see you win.
Yeah, I want to see you win. And I just like want to see everyone learn how to be the best market participant they can. Cause like you're going to be different than me. Like you're different than me. Ghost is different than me. When I trade with Igor, he trades different than me. Everyone in the community, everyone has their own style, but it really shows you that like no matter what, like how you view the market, you come in and you just every day are willing to take what the market gives you. Like we show up on Monday, it's different than how it's going to be on Tuesday, Wednesday, Thursday. And you have to just every morning wake up, know what your business is, like what's your A+ setup, what's your business, and then just be the best you can that day. Just not try to predict, just react.
Yeah, that's really all you can do. So one last thing before we wrap up. It's been an awesome show so far. Make sure as we wrap up, you guys hit that subscribe button. We got plenty more good stuff coming for you. But there's one more thing I want to touch on. It's your personal trading journey. I like to ask every trader that comes on here, how long did it take you to find your edge, to find profitability, to feel comfortable? What was your journey like? And what can you share with anyone listening to this to help them expedite and speed up their learning curve as fast as possible?
I came into Team Bull with a few years of market participation experience, but just from the investing side. But when it came to options, it took me about like 8 or 9 months of pretty consistent, aggressive strategy hopping and exploring to get to where I found something that fit my personality, felt good, felt like I could this fits what I'm going for. This is the trade that I'm looking for. These are the setups that I like, and just started getting the mental eye for it. But then it's been another 8, 9 months of just every day showing up. And if you see me in chat, I'm always there
every morning.
And
if you're not, I'm holding you accountable.
Yeah,
we're holding each other accountable.
Yeah, that's what it's about. That's the great thing about the community. It's just in this self-guided journey, it's difficult because it is up to you. You do have to take that initiative to wake up in the morning and go and sit down and be like, all right, here are my levels. Find your levels. Here's my game plan. Execute your game plan. And it's about understanding what that means for you. And I feel like the big thing for me is I entered the market as when investing, I was I'm an investor, I invest. When I started trading, I hadn't quite understood the difference at the time between viewing the market as the casino and viewing the market as my business. And that I feel is really the kind of headspace change that started getting me to where I've never been one of the traders having huge days, but I get my consistent, I know what my setup is. I know when it presents itself and I take it. And it's just about finding what that means for yourself, because we're all different. When I trade with Ghost, his supply and demand levels are unbelievable. It's not the thing that I have an eye for myself. But learning from him and learning to see it has been able to show me what I was missing from that angle, and understanding the way that we can all in a team like Team Bull use all the different insights to build up a system for ourselves. Because the thing I really appreciate is understanding how over time that there's no one right system. Everyone views the market differently, whether it's supply and demand, flow, support and resistance, your quant levels, anything, whatever it may be. It's just about understanding what your game plan is, what your business is, what your setup is, and then sticking to it. Just build that system for yourself. I'll always ask people, do you have a system? What is your system? Because a lot of the time we end up just, it's easy to just get caught in the heat of the moment as a trader. You're this looks good, but why does it look good? And then really for yourself establishing what it is, so that really understand as a market participant what you're looking for, and not just sitting there in a trade starting to panic because you don't know what is happening. I bought this call because it was green, now we're red. Where am I stopping out of this? Having that system for yourself just went from, I did the classic Team Bull, start with $5,000, win big, and then give it all back, and then realize, oh, you know what? There's a little bit more to this. It's easy to get emotional. Just keep it easy for yourselves. It's all about just the durability and the sustainability of this. We're not coming into this trying to make $1 million in 60 days. You come into that, you're going to give all your money away.
And hopefully in that process, Team Bull helped you bounce ideas and see different perspectives. And
Team Bull, Team Bull is instrumental in my ability to really understand what it meant to be the best market participant I could be, because it showed me that there was different systems that I could trust and that I could rely on, and that I started not having that conviction, and I started understanding over time what pieces were fitting what I valued and what I saw, and what pieces were conflicting with what I was going for. And just understanding that for yourself. There's been times where I've shared ideas in chat and the reception was mixed, and it made me think about like what I was like, what is it that I'm not seeing something, or is it that just bouncing those ideas and having the people like you or like Grizzly and understanding how to use like prior day close or Savage's levels and understanding what gamma levels are, and Ghost supply and demand, Igor teaching me about Greeks and stuff. All these different topics have come up through my time in Team Bull, and it's really just because like you have that community and like all these amazing people to engage with. Like I wake up every morning excited to participate and learn more, and it's just an intoxicating feeling.
And you surround yourself with 4 millionaires, you're gonna be the fifth. The classic phrase.
Exactly.
And same thing goes with trading. You surround yourself by 4 profitable traders, good chance you're going to become the fifth eventually, right?
Exactly.
So I love hearing that from you. Love seeing it, real success in person.
Exactly.
It's awesome
Thank
to
you,
see,
brother.
and just hearing all the value you gave everyone is amazing. I know I sure as hell learned a lot. I know everyone here learned a lot too, and I just can't say thank you enough. So thank you so much for coming on the show.
Thank you so much for having me, Jay.
As always, we got weekly or bi-weekly episodes, a free course, and so much more on this YouTube channel. Make sure if you haven't already, you hit that subscribe button. I love seeing you learn. I love seeing you win. And I love seeing you make so much money, you don't know what to do with it. So keep tapping in. Thank you so much for being here this long. Hope you guys learned something, and let's get rich together. Love you guys. And again, thank you for coming on, Max.
Thank you for having me, Jdun.
All right. See you, everybody.